Kate Warne, one stock you like over at Edward Jones is Procter Gamble. Now, P&G was down 9% in the first quarter versus a flat S&P 500, but they've been having problems for a while now. What can they do to turn it around?
Well, I think the first thing that's causing problems for them is the currency, and that's something they don't control, but I think it's something they're addressing, and it's partly because they're so global, so diversified. And if the dollar does stop rising, flattens out like it has over the last week or so, that could be good news. But more importantly, what they're really doing is focusing on some core brands. They're reducing the number of brands. They're basically cutting costs, focusing on getting the fat out. As they get leaner, meaner, focus on these core brands, we think their earnings will grow. That's good news for investors.
And you're also a fan of Visa. Now, it's completely different from Procter & Gamble because this stock's had a great run. They've been buying back shares. But is it all in the stock right now?
We don't think so. We think Visa can continue to run. It pays a small dividend, less than 1%. We think there's going to be 12% dividend growth per year over the next 5 years. And that's because Visa is very international. We're seeing a shift towards a cashless society, not just in the US, but globally. And it's really that long-term driver of growth that to us makes Visa a very attractive investment.
Abbott Labs is another stock you like. They're international as well. So will they get hit by that stronger dollar, or do they have enough plants in Europe to offset that?
Well, they certainly have plants in Europe, and that helps them, but it still means they'll have lower earnings growth as that translates into fewer dollars. But we think Abbott's really well positioned, partly because they have a broad, diversified brand portfolio of things like nutritional goods. Think of Ensure, Pedialyte, LASIK surgery. It's a wide variety of products. They are also focused on cost cutting, and that should grow their earnings and dividends. They have a nice attractive yield at about 2%. We think it's going to grow at about 7% per year.
All right. Thanks a lot, Kate.
Thank you.
Thank you for watching The Street.